I'm Olivia Bono-Voznenko for Modern Wall Street, and we have Stephen Guilfoyle in the house of finance, that is, and he's going to tell us what's going on today. Hello, Stephen. How are you?
Hello, Olivia. I'm fine. How are you?
I'm well, thank you. Well, jobs figures came in higher than expected. How are the markets reacting, and how will the Fed, since we're going to be hearing from them later on today?
Well, the jobs picture is quite muddled right now. The ADP employment figure, disappointed. The Challenger layoff figure, disappointed. We did get positive unemployment and underemployment numbers out of Gallup, which is a little surprising. So we're a little bit mixed right now. Gallup usually runs a little above the BLS number for people who don't follow that number, but they do trend together. So if that holds true, we'll actually see improved percentage numbers tomorrow, but the ADP number does scare me. And April is wildly notorious for being inaccurate between the NFP and the ADP.
And how will the Fed take this in terms of making an interest rate decision?
Well, this evening we have a panel of Fed speakers, pretty much a circle of hawks, the way they've been speaking lately, between Williams and Lockhart and Lacker and Kaplan. They're all pretty much, at least for now, hawkish, as long as the DXY, the dollar index, is down around 92, 93. And right now it's around 93.5, so they probably are trying to get that to 95 or so. That said, the underlying macro really isn't there right now. So we'll have to let this play out until that June meeting to see if they can get away with a rate hike. I'm sure their banking masters would like that, but I'm not sure they can get away with it.
All right, well, let's move on to oil. Since it's in the spotlight after the wildfire in Canada, what effect is this having, and is this becoming a serious situation?
Well, there is that fire in Canada, but that's not going to last forever. There's also unrest in Libya, which may last forever. So there are forces here that will, I guess, at some point cut production, but there's enough supply where that shouldn't be an everlasting issue. What we've seen is support here around $44, $43.5 for WTI crude. That keeps us in the upper range because the way oil trades has kind of got gateways. So if that gateway were to break, you would see maybe oil trade all the way down to 39-ish, between 39 and 44. But as long as it stays in this upper range for now, we're getting a little pop in the energy sector. You might as well take advantage of it.
All right, and what else do we have to look out forward to that could pull this market in either direction?
It's still earnings season. We're getting towards the end of it, but we haven't gotten to the retailers yet. And the retailers saw some lousy numbers this morning for chain store sales. And they're all kind of down today. It's one of the weakest industries within the consumer discretionary sector today. We'll start off with Macy's next Wednesday. We'll get the retail sales number for the month on Friday, and then you got about another 5 days after that of pure retail numbers. So that is probably where you want to get ready if you're preparing over the weekend for trading for the week ahead.
All right, so we'll talk retail next week. We'll have Nordstrom's to look out for as well. And I also have to ask you, Stephen, it is Cinco De Mayo. Did you guys start celebrating yet?
I did not start celebrating yet. I'm not sure I will celebrate. I am Irish, however, after all. Did you know yesterday was the 4th of May? May the 4th be with you.
I did hear about that. That's hilarious. Well, thank you so much, Sarge, and have some tequila for us.
I'll give it a shot.